Welcome back. Well, consumers can breathe a sigh of relief as inflation continues to ease. In August, consumer prices slowed to 4.4% thanks to lower transport prices on the back of the recent fuel price cuts. For the first time since 2021, inflation is below the Sarb's 4.5% midpoint. This just boding well for the interest rate cut case as we prepare to hear from Governor Kganyago tomorrow. Joining me now to unpack the print further is Chief Economist at Old Mutual, Johann Els. Thank you so much for your time, Johann. South Africa's inflation slowing down even further, now below the midpoint of the Sarb's target range. Talk to me about this trend that we've been seeing.
Yes, absolutely. Very good news, lower than expected. But as you say, it was petrol prices. We've seen significant petrol price cuts over in recent months. But if you exclude that and you look at core inflation, excluding food and energy, then that rate is down to 4.1%. So that is even more significant. And that shows me that there's almost no inflationary pressures present in the SA economy at the moment. And so over the last few months, we've seen a significant easing in those pressures. And that is absolutely good news. And if you look at the underlying trend, instead of just comparing year-on-year numbers, then we've seen that both in headline inflation and in core inflation, that underlying trend, in other words, over the last 3 months, on an annualized basis, core inflation sits at 2%. Headline inflation at 0.4%. So again, there's no inflationary pressures here. The rand has strengthened, oil prices are low, food inflation is low. So there's almost no pressures present at the moment. Also indicative of the weak economy. Consumers are still weak. Consumer goods inflation. That's clothing, footwear, furniture, appliances, vehicles. That's only 2.4%.
Yeah.
So as you say, absolute rate-cutting territory.
Indeed. It's actually quite interesting, Johann, that you talk about the contribution of fuel prices, the fact that we've seen that coming down, food inflation also. Are there any drivers of inflation still that maybe we should still keep a close eye on at this point?
I'm always worried about Middle East conflict and impact on oil prices. So for the moment, though, that's under control. Yes. I'm always worried about food prices. For the moment, though, that's under control. But you never know with food prices. You get a flood or drought or some frost, as we've had with the potato crop a month or two ago. So, but at the moment, it seems well under control. And we're always worried about the currency. But when the US is heading into rate cut territory, the dollar has softened, the rand has started reflecting that softer dollar, and I think we can expect more of that. So at the moment, the big volatility drivers of inflation all seems to be under relative control. Even inflation expectations, that usually is a worry in terms of future inflation, that has come off significantly. There's no demand-driven inflation because consumers are under pressure. So there might be some areas that we could potentially be concerned about in terms of medical inflation. Yes. But at the moment, there's nothing coming through there either. So there's no known facts like health insurance or other insurance. And of course, we can't forecast risk events like a COVID crisis, for instance, that had a significant impact. We can't forecast a war like the Ukrainian war had an impact on commodity prices, food and energy. What I see at present suggests to me that inflation is under control and will even dip further over the next few months. My October forecast is below 3.5%.
All right. Well, hopefully we will definitely get to that. Johann, let's go on to then what this points to in terms of what the Sarb could do. There's already an expectation of a 25 basis point hike. And you say, obviously, that inflation is under control. It looks under control for now. I think the second part of my question is, because now there are increased expectations for the Fed to cut by 50 basis points instead of 25 basis points. I don't know if we'll actually get there, but if the Fed decides to do 50 basis points, do you think that the Sarb could be influenced by the Fed, considering what the Fed has done, but also what is happening here at home with inflation?
I think the Sarb always say they're not influenced by the Fed, but I think the Fed's, if it's a 50 basis point cut, I think it will influence our situation in the sense that it'll take pressure off the rand. It'll make it easier for inflation to remain under control. So I think the situation currently suggests to me that the Reserve Bank could cut by 50 basis points tomorrow. I don't think they will. I think they will continue to be a good conservative central bank. And let's face it, we need a conservative central bank, so they're doing a good job. The circumstances is that they could do 50. I think they will only do 25. But if the Fed does 50 and the Fed perhaps does another 50 in November, because they want to hedge against recession risk and their own inflation has come under good control. And our inflation actually then sits under 3.5 in October. So by the time the Reserve Bank meets again late November, I think they will cut by 50 basis points then. So we're in a period where the Fed will probably cut 100 to 125 basis points the remainder of this year, and the Reserve Bank probably 75 in total. So that also opens up a nice positive gap in terms of the currency potential moves for South Africa. But yes, 25 tomorrow for us and very likely 50 in November.
Do you think whatever outcome comes out tomorrow from the Sarb, that the messaging will still maybe not be too dovish, but maybe with a little bit of a conservatism
I think,
from Kganyago?
Yeah, I think it might depend on how many of the MPC members vote for the rate cut. I think if it's all of them, if it's unanimous, I think the message will be that it's dovish. But I think, again, a good conservative central bank will warn about potential risks out there. And as I said, there's always some risk around oil prices, some risk around the currency and food prices. They're not big at the moment, but the bank will warn about that. But I do think it's going to be a dovish statement.
Yeah, all right. Well, thank you so much for your time and just outlining those drivers behind the reduction in inflation for August. That was Chief Economist at Old Mutual, Johann Els.